Perfect. Hello, everyone. Welcome to the third day of this amazing event. Today, I have the pleasure to introduce Ilya Goralik. He is going to talk about DEX versus CEX and sweet spots for EPAM Cryptocortex technology. So, Ilya, you have the microphone. Welcome.
Thank you very much. Let me share my screen and we'll start our conversation. Hello, everybody. My name is Ilya Goralik, and we have a presentation today. I think it's very exciting. We're going to talk about decentralized exchanges, centralized exchanges, and sweet spots for EPAM Cryptocortex technology. I'd like to introduce myself a little more. So right now I'm running a real-time computing lab at EPAM. And prior to joining EPAM, I was the CEO and a founder of Deltix, the company. For the company, we sold computer software, we sold licenses to institutional trading organizations, exchanges, brokers, market makers, and we did it all over the last 15 years, and we entered the cryptocurrency space with the full technology stack, and now I'd like to share with you everything we learned. And I know in this session will be a lot of people who are not so familiar with this technology. They would like to learn, so I'll keep the level at the moderate difficulties, and we'll do a lot of live demonstrations, a lot of live visualizations. So this is the agenda of my talk. We'll start from introduction to decentralized and centralized exchanges. I think we're going to spend 5 minutes here. Then we're going to talk about the pros and cons of both these entities. And then we'll go into live demos of Cryptocortex, market maker, and at the end, we'll talk about question answers. So let's start. So centralized exchange, right? It's probably the oldest trading organization where people go to central authority, intermediary, and the exchange would be providing facilities for people to buy or sell anything, well, cryptocurrency specifically. And they would use fiat currencies like dollars, or they, for example, use digital assets and perform transactions. Let's just go quickly and look at several examples of centralized exchanges. First of all, here we are. We're in Coinbase. This is the pretty developed, very obviously established application. What we see here is a chart, which represents the price of Bitcoin USD. On the left, all this flickering, right? It represents the order book, central limit order book, where people participate in the trades. They express their desire to buy or sell an instrument at a certain level, and that's where they place the orders. If I go here and I say, I would like to place limit order, I define the price, I define amount, and I place the order, and it will be represented here in the book. On the right, we can see all the trades. We can see that liquidity is pretty high. So the good thing about this, right, if you want to buy or sell Bitcoin, then you can definitely, almost certainly, perform your transaction. Let's go to another exchange. This is not as big as the Coinbase exchange called Bixi, right? Same attributes. On the right, we see the order book with activities where every time something flashes, you see that the system maintains the margin, maintains the spread, I would rather say. And the fair price of Bitcoin on this exchange right now is $39,253.72 at this moment. If we go to Coinbase, we'll see the price slightly different. So there's arbitrage between all exchanges, but in either case, we can fill our orders. And this particular exchange provides slightly more opportunities. For example, they use the visualization technology from TradingView, where people can basically enter their own charts and visualizations. And that is the nature of a centralized exchanges, which businesses running facilities to perform transactions. So what's wrong with them? What's good about them? First of all, there are multiple types of centralized exchanges, right? Main feature of all of them is central limit order book. That's very important because you know all the supply demand, and you've got separate entity which called market makers who maintain liquidity in the market. So typically, you've got spot exchanges, you've got derivative exchanges specifically designed to maintain high level of liquidity. For example, if in a spot exchange, I'm buying Bitcoin, I need to have a money deposit to exchange exactly equivalent to the money I'm going to spend. On derivatives, I have luxury. I can have margins and I can have derivative instruments where my monetary participation could be significantly less than amounts of transactions I'm going to perform. And then there's definitely retail exchange, institutional, margin allows, and short trading, and all this good stuff. So the main thing about centralized exchanges, first of all, high liquidity. You saw it, massive trading volumes, fast transactional speeds, and basically integration with traditional finance. Because traditional finance, equities and futures and currencies and options, right? They're all done through centralized exchanges. What is the biggest problem with centralized exchanges? Why we need something else? The biggest problem is the central custody. In the world of cryptocurrencies, today, I need to put my own money to, for example, Coinbase, if I want to perform transactions, or I need to deposit my own funds to either fiat or cryptocurrencies to every venue which is I'm trading. Clearly, big exchanges for reputation, you can more or less trust them. However, even them, you know, there've been hacks and there've been many cases where assets would disappear. So that's definitely biggest problem in centralized exchanges. They also work on that. They trade private brokers, right? They try to create entities which would be between you and exchange, like in traditional equity world, right? When you want to buy stock, you don't put money to New York Stock Exchange. There's a broker. It's an entity between you and exchange. Still, in the world of crypto, you need to put money to exchange, and that's definitely a problem. Security concerns. There's a lot of breaches. Centralized entity, right? It's a target for all the predators. And then, because the order book is central, you could be also subject to price manipulations. You can have some predatory tactics, which are called market abuses, and then definitely they'll cause to volatility in prices. So to kind of overcome these difficulties and these limitations, world has created decentralized exchanges, which is a very recent successful story. You know, even a year ago, the float on decentralized exchanges was relatively small. Today is definitely growing, still small, we'll talk about it. And the concept of a swap definitely created the major revolution in this Uniswap, for example, in this industry. So first of all, decentralized exchange. It's a digital currency exchange, right? That allows users to buy crypto through direct peer-to-peer transactions of a secure platform without intermediaries. So there's no central order book. There's no entity that governs transactions. It's a peer-to-peer place. However, blockchain distributed ledger itself acts as this intermediary. So decentralized exchanges, they are taking full advantage of a smart contracts and build special rules which enable this peer-to-peer transactions without exposing and depositing funds to any place. That's a definitely very interesting method of fintech. It's probably most innovative area which happened right now. A lot of new developments. And so, as I said, DEX uses smart contracts to execute market transactions. What are the different types of decentralized exchanges currently available? Mainly the three categories, depending on how the order book is formed. Because clearly you still want to be treated fairly, right? So we still need to make sure that the price is defined by supply demand. And order book is a synonym of supply demand. So there's on-chain order books where we literally, every trade, every intent to trade is recorded on blockchain. Clearly we know it's not sort of cheap and it's not smooth. So early decentralized exchanges, they were on-chain order books. Now they create off-chain order book. For example, Binance is off-chain order book decentralized exchange. So they're creating additional sort of computer software to register only transactions on the blockchain. When trades occur, then of course that transaction registers in the blockchain directly. but all the intermediary transactions don't get recorded on blockchain. But recent innovation, which is automated market makers, basically through liquidity pools, that's the one which is definitely creates a lot of activities. Obviously, I mean, I'm sure you've heard about Uniswaps and about Maker. This is basically, and about Solana networks. This is all the totally recent innovations which enable the sort of peer-to-peer transactions with the help of liquidity pools. Third-party sort of participants who don't really control your assets. They don't determine rules of the game, but at least they provide the ability to form the fair market pricing. So what's the pros of decentralized exchange, right? First of all, users do not lose control of their funds. That's huge. You keep your wallet, you always keep it, you don't give it to anybody, and you don't really use any third party to control your money. So the third party will not disappear, third party will not steal from you. That's the biggest probable advantage from my perspective. The second benefit, which is typically in literature today, it's questionable, right? Well, on one side, you don't need to go through any KYC AML ID verifications. When you go to Coinbase, it takes them a week at least to make sure that you are who you are. When you go to trade at Binance, it may take even a month. Some exchanges wouldn't accept you at all, depending on your geography, depending on your preferences. And in the world of decentralized exchange, of course, that's not an issue. No counterparty risk, it's also important benefit. Basically what it means that if I made a deal with you, then you have funds and I have funds to make this transaction happening, because smart contracts ensures that aspect of the game. And all tokens can be traded. Actually, it's an interesting point. What exactly it means? It means that, let's say I create my business, and let's say I want to create ILIA token. And now I'd like to float it, but where can I float it, right? I have to go to Coinbase, I have to go to Bixi, I have to go to any exchange to ask them to take my coin and float it. And they'll charge me. They'll charge me a lot of money, and it will be very expensive, and they most likely will not take my coin because they need liquidity. So if nobody needs my coin, they'll not float it, and therefore there'll be no liquidity. In the world of decentralized exchanges, that problem doesn't exist. As soon as I create the coin in a ERC20 sort of standard, I can go to Ethereum-based decentralized exchanges. And if I create my coin using Solana, for example, architecture fabric, then I can trade using the decentralized exchanges which are based on Solana fabric. So that's important pros. What are the cons? First of all, you can lose your keys if you forget about them, and then they're gone. Literally, goodbye. Speed. Because of the intrinsic blockchain limitations, speed is measured in definitely like the biggest consideration right now with Bitcoin, with Ethereum, measured in like dozens of transactions per second, and even the latest techniques allow tens of thousands of transactions per second, while in centralized exchanges, transactions are measured in millions per second. Limited trading functionality and scalability issues are basically cons of decentralized exchanges. So let's spend a few more minutes comparing side by side DEX and SEX. All right, first of all, that's important. Trading volumes. I just yesterday, I ran analysis yesterday, and I found that on the centralized exchanges, the spot exchanges, which is trading spot, ran yesterday $64 billion worth of volume, and the derivative exchanges had 128 billion. It's kind of funny, it's double. It's just pretty coincidence, but that's the transaction. I basically run 90%, 95% market participants. And with decentralized exchanges, still it's a respectable 4 billion almost float. Yesterday, like in 2018, daily volume on all exchanges was around 10 billion. So it's basically definitely decent number, but comparing to what's happening today, you can see it's probably less than, it's around 1%. a little more than 1%. So it's definitely not a major factor today in trading. And basically, in the world of finance, at the end of the day, volume is the king. So people will go and will trade at places where there's liquidity. And liquidity means low transaction fees. Liquidity means that you can actually fill your orders. Liquidity means freedom. So decentralized exchanges definitely making huge progress, but still not there. So as you can see, liquidity, high liquidity at SEX and not so high at decentralized exchanges. Transparency, that's a different story. Decentralized exchanges don't have formal locations. They are completely private. Insurance of accounts. In centralized exchanges, there's insurances, decentralized insurance, but you probably don't need it because you own your own. And safety of hacker attacks. I mean, centralized exchanges are notorious for large attacks. And decentralized exchanges, just because nodes are distributed, don't really serve as the good target for all these attacks. Other basically advantages, disadvantages, risk of infrastructure, where servers work. DEXs are decentralized, therefore they most likely would be less vulnerable. They're definitely less vulnerable. Government shutdowns, right? I mean, you obviously know that China and Russia frequently go favorable and then non-favorable for exchanges. And in decentralized world, governments completely impossible to, I mean, they obviously can do some sanctions against people, but they cannot do against exchanges because they are practically untraceable. Privacy, definitely DEX6 are significantly more private than centralized exchanges. In fact, all centralized exchanges after $2,000, more than $2,000 get recorded and reported. And that's the comparison. On the opposite side, functionality. Clearly, centralized exchanges offer crazy amount of order types. Even simple exchange like Bixi, if I go right now and say what orders I want to put, you can see different orders, limit and stop market and stop limit. This is all very important if you really want to trade. And finally, popularity. So at the moment for traders, people who really want to trade, clearly centralized exchanges are places to go, and decentralized exchanges are still in the infancy. However, they're gaining popularity. So with all that, I would like to say what our position at the moment with all this story. So traditional Deltics and now EPAM works with large institutions. So we are institutional software vendor, and as such, we definitely need to be cognizant of the things which are happening in the institutional world. And today, even cryptocurrencies as a class is still in infancy for large institutions, not to mention decentralized exchanges. So at the moment, we're focusing definitely on centralized exchanges, and we put together a platform called Cryptocortex, which is addresses pretty much entire ecosystem of secondary markets for any digital assets. We're going to go there in a second. And the good news is that the biggest problem with decentralized exchanges is liquidity. And the new swap-like machinery, atom swaps, they provide concept of liquidity pool. And there's even our clients already, Deltix has several clients who start working with us on utilizing our market maker technology to submit supply liquidity to decentralized exchanges, which is super exciting. Now let's look at this diagram, right? What does it show? That's basically now I'm started explaining the sort of Cryptocortex internals. So on the right side, we've got a bunch of exchanges, right? And exchanges provide liquidity, and the Cryptocortex could be used as a software for exchange, a broker, or market maker, or DC desk. This diagram just depicts the big picture. So if we, for example, ignore exchanges and start looking only at matching engine, then you can run your own exchange. However, this is more like a broker, introducing broker view of the world, which doesn't exist in a vacuum. brokers who service clients, they also need to respect and they recognize the liquidity. So on the right side, we've got a bunch of liquidity nodes. We're aggregating this liquidity through our technology called Timebase, and we're basically allowing market makers or brokers to make price changes if they want to inflate them or deflate them, depending on the needs. And eventually we distribute the flow, market prices. In this case, we're talking right now on the brown arrows. They illustrate the prices. We need to stream prices to consumers, right? And so FixHub is a very important node in our ecosystem, which is very popular. It allows for brokers or exchanges to stream their prices through Fix protocol, as well as binary multicast for very advanced market makers, or through REST and WebSockets. And then all the prices get distributed to discretion traders, systematic traders, and market makers. Green illustrates the order flow. So once I receive the prices, now I want to trade, I'm using the different means of trading. Discretionary people just enter orders manually. Algorithmic traders enter orders through robots, which use different protocols. And eventually order flow goes to FixHub. From there, it goes to matching engine, and if matching engine doesn't want to match, it just passes it to execution server and streams back to liquidity or matches internally. In this case, it would be just exchange. Otherwise, it's a brokerage ecosystem. So you can see it's a big machinery. And without saying too much, let's jump into action and see it in action. So let's start from me opening the Cryptocortex landing page, and this is architecture. Anybody can go to Cryptocortex.io and look at architecture, and this architecture represents pretty much the diagram I showed before, which except it's a little more graphical. So this is aggregator of prices from the world, and I already kind of started this aggregation. So this how it looks. In fact, let me do this. Let me go to Timebase Web Admin and show you. This is cryptocurrency world as we speak. We connected to 100 plus liquidity venues, and in this case, I just took a subset of them, and just when I click on any exchange, let's say, for example, we go to Bitstamp, and I click on Inspector, you will see immediately this all flickering, all these prices coming to us in a with millisecond timestamps. And if I click on any instrument right here, let's say I'm clicking on this cell, just give me 1 second. I need to double click. There's a big, very large records. So this is a vendor snapshot. So if I go to this view, then we'll see the data and charts, which I'm going to say, let's look at the chart. This is the chart. This is the market of liquidity on exchange with very, very kind of low resolution. So this is the 50 levels of asks and bids. If let's say I want to say, and I'm looking at the moment at Bitfinex, and if I zoom in, then data dynamically get delivered to us through public internet. And at this point, we're talking about hundreds of thousands of messages per second. Basically, if I zoom in to 1 minute of market, and you can see it's getting more and more fragmented, I mean, more and more kind of precise. And if I zoom into a few seconds, you will see that all these horizontal lines get replaced by actual orders. So this is what happened at the moment at Bitfinex. This is the real order book with real flow at Bitfinex. Cool. So this is market data, and we connected to a lot of these different venues. And the next step, let's just go to trading UI. This is the very interesting part of our story. We'll look at it from several angles. The angle number one, as you remember, I showed you in the beginning of our demo, Coinbase. So we are connected to more than one exchange. And if I want to see only Coinbase, let me just blank all exchanges and say, hey, I want to look at only Coinbase. This is it. This is Coinbase book inside Cryptocortex, delivered exactly as Coinbase delivers it, except our charts are more popular and powerful because we allow to display more things and our order types are more advanced, but otherwise it's Coinbase. But the beauty starts from me seeing Coinbase in combination with other venues. For example, let's go look at Coinbase and Kraken side by side. And we're seeing that there's right now spread $6.11, $12. I mean, it's definitely very dynamic spread, which is basically dances here. And you can basically, it means that it is arbitrage. However, if arbitrage is less than commissions, then of course it's not realizable arbitrage. And we're seeing that market moves, and this is Kraken and Coinbase. Now I'm adding additional liquidity providers, Gemini and Bittrex, and all of them create the fair price in the world. This is it. This is the ultimate kind of answer. And one particular venue here, which is very important, Deltix Market Maker, which we're going to come to it in a second. But here we are. Before I jump into market making, I want to show you how important centralized exchanges, what facilities they offer, and what facility Cryptocortex offers to people. For example, if I want to create large order and buy on the market, let's say 50 Bitcoins, the system automatically defines something called smarter router. Because liquidity is fragmented, it will try to fulfill the order by breaking it into smallest pieces and filling them at the best price on different venues. So let's say I'm going to buy 50 Bitcoins, and I just say buy. And the system immediately executed it. Of course, I didn't trade right now 500, actually a lot of money. It's a simulated execution, but we're simulating exchanges. And this order, one order, was executed through this chain of transactions at the bottom. And let's just study it. I click on this, I copy its ID, and we're going to a facility called Monitor. This is also part of Cryptocortex system, and a lot of exchanges and vendors use it. And so today we run 58 million orders. As you can see it right here. By the way, this is a very cool chart, which shows the flow from what venue we do and how does it basically executes. So you can actually look at different rates per second. And right now it's basically around 100 rates per second because we're not doing big executions. And mostly it's, you can see the market maker works with our core exchange. But let's go back. So we're going to all orders and we're finding one order which we just executed. This is it. This is our order. And I go to concept, the tool called Algo Inspector. Beautiful. Let's just look at it. The 50 Bitcoins, which I wanted to buy, were broken into, first of all, 4 different venues. We filled 6 Bitcoins at Bittrex, and 5 at Gemini, and 18 in Coinbase, and 19 in Bitstamp. Totally, we did 113 child orders. Just think about what I just did, right? We just took one order of 58 million, which we did today, and analyzed it, but the order was broken into pieces and routed automatically, algorithmically, to different venues to make sure that your execution price with commissions, with all the artifacts of execution, best fulfilled. That's pretty powerful. And that's obviously hard to do at the moment in a decentralized world. However, we're getting there, but within centralized world, that's probably one of the biggest beauties, advantages of Cryptocortex. So now let's go back to decentralized world. Both centralized world and decentralized world need liquidity. They need some party. If I want to buy something, I need somebody who would sell it to me, right? And if I want to sell something, I need somebody who will buy it from me. Usually there's a kind of a role in the finance called market maker. And we, within Cryptocortex, have a very powerful solution called market maker, which I'm going to spend a few minutes describing to you what it does and how it works right here. Let's go to market maker user interface. Beautiful. So let's start from the, I just give you a little overview of this particular tool. The goal of market maker is to allow people to maintain buy and sell orders on exchange because they need to provide liquidity, right? They need to act as a counterparties. Basically, typical market maker has a contract with exchange, and their services are required by exchange, and they would be maintaining spread, maintaining liquidity, so that if somebody wants to buy, they will sell, and if somebody wants to sell, they will buy. And this algorithm, this tool, allows to execute market making business in a kind of very workflow oriented fashion. So the market maker starts from this bots. Each line 3, for example, represents the market maker for Ethereum BTC, which is traded on a venue called DLT XML. And for example, this format is for futures. It's a derivative, which is basically for on BitMEX. Let's just go back to line number 2 and study that particular example. So we are saying that we would like to create a bot that would be providing certain sizes. Basically, right here within the pricer, we define our sizes. We're going to maintain 5 Bitcoins, 10 Bitcoins, 15, 20, this level of buy Bitcoins and sell Bitcoins with certain price levels. And we're saying that, hey, we're not going to be worse. We're going to use Kraken and Coinbase as a source of our liquidity. So before we do anything, we're maintaining, this is the source book, where we're looking at prices on Kraken and Coinbase. Next, we're going to tell the system that we will maintain this amount on a buy ladder, this amount on the sell ladder, 5, 10, 15, and this are going to be increments. And our pricing strategy in this particular case will be very simple. We're going to maintain minimum spread, and this is the most important feature of the market maker, because here we are defining what kind of pricing algorithm you want to use. In this particular case, it's going to be best aggregated. And on the same exchange, I'm using another bot number 4, which will be using Coinbase. And it would be replicating this exchange. What does it mean, replicating? I mean, a lot of times you don't have liquidity. You start up, you look like a small exchange. And when people come to you, they want to see that there's a lot of liquidity. And so what we're doing right now, we're saying, hey, why don't we take Coinbase as the sort of role model, and we will pretend that our liquidity, I'm as a market maker. Here I'm saying that I'm going to be maintaining 6 Bitcoins total on the buy quote, right here, and 1 Bitcoin on a sell quote, right here. And I'm going to be only taking 3 levels from Coinbase and no more than 15% of the liquidity, and the same here. So this is the book, which is controlled based upon replication from the Coinbase, and this is my minimum spread. And every time price changes 20 basis points, I'm going to recalculate my order book. That's pretty much the logic. So my market maker right now, join market maker on Bitcoin USD, is formed by 2 bots. One bot, as you can see right now at the bottom, is replication, and second bot is the fixed prices. So if I go right now to Cryptocortex exchange, Cryptocortex exchange user interface, it has to be, just go again. Cryptocortex, I'm going to trading UI, and I'm going to be basically telling system, hey, I don't want to see anybody except only our own market maker. So this is it. This is our exchange. This is the prices which we are broadcasting on this exchange. This is our minimum spread. At the moment, it's basically maintained by 2 bots, and this is the spread which we're maintaining through Deltix market maker. So if I minimize my screen here and I look at market maker, you will see that this book, just give 1 second, I'll make the screen, and that book are totally identical. So this is the book from on the Deltix market maker, and this is the book they are basically formed by the same algorithm. So we're broadcasting prices from market maker through APIs to the Cryptocortex exchange. I think it's very cool. And if I make any changes, if I make any modifications to the algorithm market making, it will be immediately reflected to this system. And so we can run multiple instruments, and we can look at both of them, Litecoin, for example, over Bitcoin versus Bitcoin USD. And that is the sort of infrastructure ecosystem which we developed in Deltix before we became part of EPAM. And now, obviously, we are expanding it as a part of EPAM product offerings. So our clients in this with this particular product are top market makers in the world. We got around 30 pretty large and small, different sizes participants. Some of them known to everybody, some of them not, using our technology. And the most interesting part about this is that that's how we're going to be joining decentralized world, because decentralized exchanges will benefit tremendously from this liquidity, from knowing the actual fair prices, and from understanding the rules of engagement. Pretty much one more piece I'd like to show you that to complete the whole loop, right? So if we're going now to Timebase, back to the where we came from, and say, hey, you know what? Why don't we look, because Timebase in this particular case acts as the gateway to our Cryptocortex exchange. And the market maker is just one of the many liquidity sources. So if you go right now to Deltix market maker and say, hey, you know what? Let's just go and inspect. This is it. This is the book which market maker submits to Cryptocortex. And if we go to prices, let's say I'm going to Bitcoin, USD, and I look at the chart, we'll see the beautiful chart, which will show us exactly all the transactions, all the flow, all the orders, which we did inside market makers. You can see we're maintaining spread. It's actually pretty cool, visible if I go to Litecoin, BTC, then the spread would be fantastic. You can literally, I mean, obviously it's algorithm, but you can literally see how we maintain the spread, how it basically works. If we look at the last 3 hours, that's the prices, this is the spread. And if I go right now the last 5 minutes, going back to Bitcoin USD, we will see all the prices, all the orders, and that is the, sorry, with that, I would like to finish my kind of core material and start questions and answers.
Perfect. Okay, so we have a couple of questions here. Let me start with the first one. The first one is, how fees are calculated in decentralized? Is it an action principle?
Fees are calculated because we are not, we're running as a software vendor, right? So we don't run our own exchange. So whatever our clients want to use as a logic for fee calculations, they will be implement our system. Majority of exchanges which work with us calculate fees based upon the trading volumes of the last 24 hours or last week. But in some cases, we've got clients who run what's called OTC programs, which is basically VIP kind of programs. And the fee calculations in these cases are just kind of, for our purposes, is just defined by clients. So they program their own logic using our APIs. So basically, we don't really do anything, right? We just implement what clients want because we're a software vendor. I hope I answered you.
Thank you so much. The next question says, what do you mean with difficulty of use with decentralized?
Yes. It's not what I mean, unfortunately, it's what the world at the moment means. If you are using decentralized exchange, You basically need to hook up your own wallet with this ecosystem, right? Depending on exchange, if you want to use Uniswap, you have to connect to them yourself. You need to learn what they do, and comparing to this, right, guys? Just let's just compare. Here I am, right? I'm going to centralized exchange, whatever it is, right? I'm going to user interface. I'm saying I want to buy 20 bitcoins. Everything is done for me, right? I'm completely serviced. In a world of decentralized exchanges, I need to do all this myself. I need to find a participant. I need to find who's going to be trading with me. I need to find this user. Here, I'm just saying, hey, I want to buy 5 bitcoins. I'll sell. Bingo, I've done it. Orders filled, we're done. And all my positions, everything is reflected, all my P&L calculated, all my events, it's all basically taken care of. In the world of decentralized exchange, it's significantly more difficult because you don't even maintain your own presence in any venue. It's all your responsibility.
Okay,
That's kind
thank
of
you.
what I think.
We have another question. It says, decentralized coins, all tokens can be traded. Is it valid within certain protocol, for example, ERC?
Honestly, I'm not such a big expert, but what I read and what I heard and what I've been told, that until recently, until Solana, the basically ERC was the main fabric for decentralized exchanges. And because they all were using the smart contract logic, which was originally implemented in Ethereum and adopted for purposes of decentralized trades. So yes, I mean, the ERC tokens, right? The ERC is the fabric for decentralized exchanges. However, their currencies are very obscure and unique. Most of them don't trade Bitcoins and Ethereums. They trade some very interesting instruments like Uniswaps and makers. So that's how I answer this question.
Excellent. Two questions more, and actually we have 3 minutes left, so I think we have time to answer those ones. The next question is it possible to make arbitrage between decentralized? What is the principle for 1-inch arbitrage?
Well, I'm not sure I know how to do arbitrage between decentralized exchanges and centralized exchanges. Of course, arbitrage is the way of life, right? That's what you do because you hedge your orders and that's pretty much you do. I don't know how decentralized exchanges allow even algorithmic trading, if you can really even define the provisions for arbitrage, right? Because it's all peer-to-peer. So I don't know how you can, like, honestly, if 3 of us in the room, right, and I'm going to tell you, I'm going to sell you Apple for $2, and some friend in the same room say they're going to buy Apple from him for $5, it's just not going to be probably friendly conversation. So I don't know about arbitrage in the decentralized exchanges, how it all works. But maybe it's just me not knowing completely rules of engagement. But what I feel about it is just opposite. It's supposed to be sort of trust, less peer-to-peer transactions. And arbitrage, it's hard to do in these conditions.
Thank you. And one last question. Can you demonstrate the centralized user interface? Is it similar to centralized UI?
Well, I'm just showing you, yeah, basically, this is centralized user interface. Basically, centralized exchanges, if you're talking about the back office, then it's, sorry, it's not what I want to show you. I want to show you. The back office of centralized exchange is a massive database which contains all the sort of guts of the system, right? It has a huge amount of functionality. It basically shows the different settings, different organizational dashboards, different user settings, who is who, where. It has for every user its own tester1@demo.com. Maybe it's not the right question I'm answering, but basically all transactions of a user, all the trading ecosystem, all the profiles. I mean, that's the centralized exchange. All the closed orders, right, which we did. So this is centralized exchange. Like today in our demo, right, we did orders, smart routing orders and market orders, so on and so forth. That's a back office, right? The front office I just showed you, for example of Cryptocortex front end is here, and Coinbase I just showed you in the beginning, and Bixie, and they all pretty much look the same. They all look almost identical. There's order book, there's a panel to enter trades, and there's a history of trades. I don't know if I answered your question. If you, by the way, let's just let me point back. So you can all find me right here. If you need to ask me questions, here's my email. It's very simple, iliagorlak@epam.com. And any questions you guys have, any suggestions, any comments, please feel free to talk to me. I'm super excited to continue this conversation.
Thank you
Thank
so
you.
much, Ilya. We are just in time, so thank you everyone for your attention here, and see you in the following events. Bye-bye.
Bye-bye.